Hey there, traders. We're back for another recap. Today is Monday, August the 4th, and we'll come back to this daily chart to talk about what they might be doing, where they might be going, what they did today. But we're going to focus on the levels that were put out in the morning and discuss the resulting trades based on our game plan and daily levels from the morning. Here they are. This was put out before the opening bell. And one thing I talked about right off the top was a trend line that was around 629.50. It was not listed as a level, but you had that information here that did come into play, so that was good knowledge to have. Basically talked about the bulls would have to get back above that trend line if they wanted to possibly continue higher. This whole thing could be a little bit of a fake out, but we'll talk about that when we get to the daily chart. And the other levels, discussions about what they could mean, including this breakout area around 612 to 613, also not listed here, but you had this information. If they did get down there, that was really important and probably still will be important if the bears get down there. I explained that in the recap from over the weekend, which covered the previous 2 weeks, if you want to go back and look at that. So those were the levels and the game plan for today. And here's a screenshot of what the SPY looked like right before 9 o'clock a.m. Eastern. Here are the main levels that the SPY interacted with. Did not get to 632.02, at least not in the open session. After the closing bell, they got up there. How would you have traded these? I like to give the market 15 minutes to settle in. So after 9:45 Eastern, they were up here, did not come back down and bounce off of 627.56. Instead, they went higher. Well, they did hit this 627.56 and pulled back about 4 points or so. I'm not going to count this trade because it happened before that 15-minute window. So meanwhile, they're going up toward this next level. We also like to adjust our levels with a 5-cent buffer, pull the level down toward price, whichever direction it's going, just to kind of get in front of the front runners. A lot of times it tends to be traders selling before levels of resistance and buying before levels of support. In this case, they came up to a penny shy of 628.75. You can see that 628.74 pull back just enough for a base hit. When you see this, and if you're acting fast enough, you want to think twice about trusting the level when they come back to it quickly again like this. So really, this is a no trade because of a near miss right here, just 1 penny. They did come back later. That would have been a base hit if you were precise enough. What I did, and we'll watch the recording of the live trade that I took, really 2 trades. When I saw that they wanted to get on top of this level, I was eyeing the 629.50. Let's go ahead and put that on here because I talked about 629.50 being where the trend line was. And just to give you a visual, this is where that trend line was. So I thought if they get up there, that's where it's possible they're going to hit some resistance. So I jumped on board, rode this up 7 points or so, and then took a short trade when they bounced off of the trend line at 629.50. And they got above, and you can see they went higher. So really no trades according to the rules today because of that near miss thing going on here. Unless you decided to get on top of this thing and go long. Technically, there was enough time that elapsed after they got on top of this and came back down it. So that would have been a trade there possibly, but because it really wasn't neat, they were pretty much going sideways during this whole time. I talked about 632.02. They got up there after the closing bell, and at least so far in the post-market, they've been going sideways up in that area. So here's a recording of the trades that I took. Here's the clock in the lower right-hand corner. So I'm playing by the rules for the most part, and I ignored this little reaction, and I ignored 628.75 because of the near miss that happened. I considered that the near miss, but really this was the near miss here. But when they came back below this and started looking a little bullish, I assumed they're going to go up and hit this 629.50 area. That's why I wanted to scale in. And so anyway, I jumped on board with 2 contracts as they're going up. And I'm going to try to pause this right before what I did is let's pause it now to talk this through. So you see what I'm doing. I'm long 2, and I'm going to sell 4 here. That would satisfy this long position of 2 contracts, and then it would put me short 2 and possibly 4 or 6 if they continue to go higher. This whole area, I was hoping to get good resistance for a short trade. So what happened after they got close here, I decided if they're going to come back up here, they're going to probably go a little higher and spike this. So I end up moving this around a little bit. So that's what I'm going to try to pause to show you what that looks like right before, because it happens pretty fast, right before that order got filled automatically. There we go. So I moved that, just kind of switch places. So now I'm basically selling the 4 here, which would get me out of this 2 contract long position and put me short 2. And that's exactly what happened. It happens pretty fast. So when I'm short 2, I just got 4 points on the base hit. So 7 points up, 4 points down. And here it goes. That fast. And that's all I did. I'll just scrub ahead here and show you the rest of the day until 4 o'clock. On the logs, the play in by the rules, here are the 3 levels that were hit, all the notes that explained why there were no trades if you were playing by the rules. So nothing gained, nothing lost. And then on my trade, it was $1,100 before commissions, with 7 points on the 2 contracts going up and 4 points on 2 contracts coming down around that area. 629.50. We knew about it before the opening bell. In fact, I'll show you what that trend line looks like and where 629.50 came from back on the daily chart. So you already know about the trend line that was up here where they spiked and pulled back down. But the trend line I'm talking about today, it might look familiar. It's from this pivot high to this pivot high. And for quite a while, since July 3rd, we've been tracking this trend line. It's informed a lot of trades. We got above. Typically, when they'd come back down, they would bounce off of this thing. This would act as support because it's been resistance before they got above it, but they gapped below it on Friday. So on the way back up, let's just look maybe at a 5-minute chart. Sure enough, they had a fight to get above this thing. So this is where my trades were. Hope that makes sense. So what are they doing? Well, they've already filled this gap up at 632 or so. That was the gap left over from last Thursday, I guess. 632.08 to be precise. So they're above this now, or at least in the neighborhood in the pre-market or the post-market today, and we'll see what they do in the pre-market in the morning. So you can look at this like this is a pretty big pullback, like one big down candle here. I know there's 2, but just visualize this. And if they stair-step their way back up here, they've got to get above the highs, obviously, to break into new highs, but it's going to be more overhead resistance, most likely, if they continue to climb this thing to go all the way up back to where they were a few days ago, last week. But if they give it up and they start falling back down, we've already talked about this zone around 612, 613 or so, which seems kind of far away at this point, but when the market's volatile, things start moving, anything can happen. So what I said in the game plan, if you recall, was they're in the middle of stuff, and they still are. So there will be more precise levels above and below current price that we can use for more precise scalp trades. And those will be put out to subscribers before the opening bell. You know the drill. But that's all I have for today. Just we'll keep an eye on this trend line. I'm just going to go ahead and keep it back on here because it probably will come into play. They're going to spend some time trying to get back above this thing. They're above it now, but it doesn't mean they will stay. Either way, it's support on the downside, and if they're below it, it's resistance on the upside. This is the area the bulls need to be above to go higher. And if they stay below, they start closing hourly and certainly daily candles below this trend line, which is going to change. Currently, it's 630-ish or so. Then that could mean the bears are going to come out in force. Too early to call anything at this point. This just gives us a baseline, something to gauge price action against. So thank you for tuning in. I'll be back tomorrow to do it again. Hopefully get a video posted every single day this week. I should have more time. I'll talk to you again in the next recap video. Have a great rest of your day.